We've all been there, right? You get this flash of insight, a brilliant trading idea, but then you're stuck. How do you actually turn that gut feeling into a real system you can trust with your own money? Well, today, we're going to break down that entire journey from that first spark of an idea all the way to deploying it in the live market. It's a question that really gets to the heart of what this is all about. Is it just pure luck? Some kind of secret indicator? A sixth sense for the market? The truth is, it's actually way simpler and honestly, a lot more powerful than any of that. It's a process. That's it. A professional trader relies on a systematic, repeatable, and seriously battle-tested strategy. They treat trading like a business, not a trip to the casino. And this is what turns a hopeful hunch into a real statistical edge. To make this whole thing easier to wrap your head around, we're going to frame it like a story, a journey in 3 distinct acts. First, we build the blueprint. Then, we survive the crucible. And finally, we build the bridge to the real world. So, welcome to Act 1, the blueprint. This is the creative part, the phase where we lay the entire foundation for everything that's coming. And it doesn't start with code or complex spreadsheets. It starts with just paying attention. The best strategies, they always start with just deep, immersive observation. You're watching a specific market, you're looking for recurring patterns, little quirks or inefficiencies. You're not just watching lines on a screen. You're trying to understand why the price is moving the way it does. Maybe you notice a certain currency pair always overreacts to inflation data. That's it. That's your starting point. Okay, but before you get too excited about your idea, we need to talk about one of the biggest traps out there, survivorship bias. See, if your historical data only includes the stocks that are still around today, the winners, and it ignores all the companies that went bankrupt, well, your backtest is going to look incredible, but it's going to be a complete fantasy. You have to build your foundation on clean, accurate, and unbiased data. No exceptions. So the real goal here is to turn that fuzzy observation into something you can actually test. Buy tech stocks when they're cheap. What does that even mean? It's just a feeling. A strong hypothesis, on the other hand, is super specific. Something like, if a stock gaps down more than 5% on an earnings report, but then closes above its opening price for the day, it tends to recover half of that gap within the next 2 days. See the difference? That is specific, it's measurable, and you can prove it wrong. That's your blueprint. All right, let's move into Act 2. This is where we see if that blueprint is actually worth anything. We call this the crucible for a reason. This is where your idea gets put under intense pressure to see if it's the real deal or just fool's gold. This is really the moment of truth. And I'm going to be honest, most trading ideas, even some pretty good ones, they don't make it through this phase. The point here isn't just to see if it worked in the past, it's to figure out how and why it worked, and if there's any reason to believe it'll keep working in the future. The way we do this is through a testing loop. It's iterative. First, you define crystal clear mechanical rules based on your hypothesis. No room for interpretation. Then, you do a quick manual sanity check. Just scroll back through some charts and see if it even looks plausible. Only then do you move on to a full-blown automated backtest on years of data. And finally, you analyze those results and refine your rules. Then, you do it all over again. So how do you measure success? You got to be objective. You use key metrics like these. Think of the profit factor as your system's efficiency. How many dollars does it make for every dollar it loses? The max drawdown, well, that's your worst case scenario, the biggest gut punch drop your account takes. And the Sharpe ratio basically tells you if the returns you're getting are actually worth the wild ride of risk you're taking. Together, they paint a really clear picture of your strategy's personality. But as you're refining things, you have to be super careful of this huge trap called curve fitting. This is when you just keep tweaking and tweaking your rules until the backtest looks absolutely perfect on your historical data. The problem is, you've just created a system that's a genius at trading the past, but it's almost guaranteed to fall apart in the future. The goal isn't perfection, it's robustness. A robust strategy has to be able to survive anything the market can throw at it, so you have to stress test it. You run it through the data from the 2008 financial crisis, the dot-com bust, the COVID crash. How does it handle insane volatility? What about those long, boring periods where nothing happens for months? If it breaks under pressure, it's not a resilient system. And that brings us to the ultimate reality check, out of sample testing. Here's how it works. You build and refine your strategy on one chunk of data. We call that in-sample. But then you test the final version on a completely fresh set of data that the system has never, ever seen before. And as you can see, the performance is almost always a bit lower. That more modest result, that's your most realistic expectation for the real world. Okay, on to Act 3. Your strategy made it. It survived the crucible, it's been validated, it's robust. Now, it is time to build the bridge from the clean, sterile lab of backtesting to the messy, chaotic, unpredictable real world. And that bridge has a name: live simulation, or what most people call paper trading. This is your final dress rehearsal before the main event. You're trading your system with fake money, but you're doing it in the live market with live data. The whole point is to find all the real-world problems that a backtest just can't predict. You see, backtests can't model everything perfectly. Paper trading is what shows you the true cost of things like slippage and commissions. It can expose problems with your broker's platform or data feed. But honestly, the most important thing it tests is you. Can you actually follow your own rules without hesitating when real market chaos is unfolding? It's a test of your psychological discipline under fire. You've built the blueprint. You've survived the crucible. You've crossed the bridge. And now, for the climax of our journey, going live with real money. This kicks off the final and, frankly, the most important phase of the whole process. But you've got to remember this. Hitting that go live button is not the finish line. It's the starting line. Now you're actively managing a system in a market that is changing every single day. The real work has just begun. The principles for this phase are absolutely critical. You always start with small capital to test the waters. You track your live results like a hawk and compare them to what your backtest predicted. You analyze every single trade, win or lose. And you have to watch for something called strategy decay. That's the slow erosion of your edge as market conditions change. And, maybe most importantly, you need a predefined plan for when it's time to turn the system off. So there you have it. That's the whole journey in a nutshell. Act 1, the blueprint, where a simple hunch becomes a testable hypothesis. Act 2, the crucible, where that hypothesis is forged into a resilient system through relentless testing. And Act 3, the real world, where you bridge the gap to live trading and begin the ongoing job of monitoring and management. At the end of the day, building a strategy and actually finding a statistical edge is a massive accomplishment. It really is. But it's only the beginning. The true mark of a professional trader is found in the discipline to manage that edge, day in and day out, as the world changes around you. So the real question is, are you prepared for that part of the journey?